All right, this is the Savvy Trader, and I'm going to bring you today trading with market internals. Hopefully this will shine some light on a subject that I've gotten a lot of questions about. So let's get to it. Now, what are market internals? Market internals are indicators that use data directly from the stock market to calculate the market's direction to the trader. The indicators give traders a feel for what the underlying market is doing, which can better prepare traders to make trading decisions. They also help us understand insights into the market's breadth or its true energy underneath the hood of the market. With so many stocks and sectors moving daily, as a shorter-term trader, it's important to see what the broader market is doing on any certain day, regardless of what index averages say. But why use them? The S&P might be down on the day, but if the internals are at the high of the day, that might be a clue that downside in the market is near an end. Also, if just one sector is driving an intraday move higher, while the majority of stocks are down based on decliners outpacing advancers, it may be a red flag that the market is about to turn and make a true move lower. What are some? We have the tick and its cumulative indicator, the advance and decline ratio of the NYSE, the volume up and down for the NYSE, and the VIX, which is the CBOE Volatility Index. Now, this is a lot to cover, but is there an easier way? I say yes, by using the Dominator system. It tracks the up and down volume and advancing and declining ticks in the following: the Dow, the E-mini, the NASDAQ, and the Russell 2000. Now let's dive into what the Dominator, the ticks, cumulative ticks, all tell us. Okay, this is just a little narrative on the NYSE tick. So basically the tick does is it shows a measurement of the collective buying and selling pressure on all the NYSE stocks. So what it does is it summarizes the number of stocks that are up ticking in price versus ticking down in price. So if you have 1,000 stocks going up and 1,000 stocks going down, the tick will be 0. When you have 2,000 plus ticks and 1,000 minus ticks, you now have plus 1,000. I hope that makes sense. Now, the focus with the ticks is where it spends most of its time. Generally, this tick spends most of its time between plus 6 and minus 600. Now, those readings are basically useless. That's just a sideways market. When the ticks are quiet in the middle of the range, it shows a market with no conviction. Now, once there's readings over 800, plus or minus, or even better, plus 1,000 or minus 1,000, that's an extreme tick reading, and that shows institutions coming into the market, either buy programs or sell programs. Now, I put a 5 EMA on my 5-minute chart for the NYSE tick, and I also used the cumulative tick, and we're going to look at both. The cumulative tick, the difference between it adds up all the ticks. So if you have a plus tick and a minus tick, you have 0. Now, if you have plus 500 minus 750, now you have minus 250. And what it does is keeps a running tally throughout the day. It just doesn't give you what the present ticks are. It adds those ticks up all day long. So you're going to see a histogram. And it'll make sense once I show you a picture of the chart. Okay, we're going to get ready for the open. Right now, you're looking at a 10-pane chart. This is kind of my dashboard. I'll talk you through it before we get the market open. Basically, all the way over to the left, this is my tick chart and the 5 EMA. And the shaded area is going to be above and below 400. And then my signals come above 900. This is significant. This is when institutions are starting to buy and sell to influence these prices right here. Retail investors can't push the market to levels that the institutions can, obviously. In the bottom pane right here, I have my cumulative tick. Now at the open, if it's a gap up or gap down, you'll see it move slightly, but this is something that keeps track of all the up ticks and down ticks for the day in a cumulative fashion. So if you get plus 100 and minus 200, then it's minus 100. It just keeps adding the tally up all through the day. Helps me keep track of if we have a bullish or bearish day. And then this is the advance and decline line right here, advancing and declining issues. This is Hakanashi, so it's kind of a smooth chart for me. I don't trade specifically off either one of these, but it's just added information. I want to see where we might get to a level and flatten out and then move higher. And then you have the Russell 5 minute, you have the SPY 5 minute, the Q 5 minute, and then I have the VIX, the dollar index, and TLT. And then I have two other windows that I just kind of change up all the time. XLK's technology. If the SPY is going to go higher, it really needs technology. It's one of the major sectors in the S&P 500. So without participation with technology, normally the SPY doesn't rally, but I like to keep an eye on it. And then, like I said, this last window is just for maybe a stock that I've already entered that I'm just watching. Dollar index, TLT, they tend to move inverse of the market. So when these go higher, the market's usually going down. So I use all this information and trying to make trading decisions. So what I'm going to do is pause the video. I'm going to let the market open, which is going to be in about 2 or 3 minutes. And then I'm going to show the reactions of the tick. Today's December 28th, and how I kind of put that information together into my trade day. Okay, we're live right now, December 28th. This is the opening bell. As you can see, I'm looking at the ticks right now. High, low of the ticks, 237, low is 109. This is setting up for a boring week. I mean, we're going to have low volume into the end of this week because it's a short week. Next week, we're going to have a Monday off again, another short week. So first thing I do is I want to look at the price level of my ticks and see how they're moving. And right now they're pretty flat. You can see right here, this is the number right here of ticks, positive, negative, and it's at 55. Usually you have a little movement. This is pretty boring right here. And then looking at the IWM, looking at the SPY, all these, basically they're, you know, we have to give it some time for some movement before we can make decisions. You know, on the charts here, some of these indicators, they're repetitive with the compass system. You need to give the market a little bit of time for it to kind of digest what's gone on overnight before you can make any kind of informed decisions. I'm going to switch over to another chart, give you an idea of what the Dominator is looking like right now. Okay, now we have the Dominator up on the chart right now. Look in the lower pane right here, we can see that we're pretty much all green. We got a dark gray background. Dark gray background is telling me that, hey, you know, it's pretty muted. Yesterday's price action on the 27th, it basically started here. And you can see some pre-drawn lines here. This is part of the Dominator system where you have these pivots. What I like to do is I like to come in and draw in my own. So I'll come in and I'll mark some of these areas just to give myself an idea of where my high and lows are going to be. Oh, my bad. Need more coffee. So these are the highs from yesterday. Okay. And I'll come down and I'll look at these lows. We'll grab the lows. And I'll leave those up on my chart. So what this is going to tell me is if I get a breakout above these highs right here, it's easier for me to see during the day, and a breakout below these lows. Yesterday we had an inside day. I kind of called that early. You know, sometimes you get it, sometimes you don't get it. But based on the market action, I seen immediately we dropped in the morning. Then we had this nice bounce. We made a high. We kind of chopped around a little bit. We tried to break out. We didn't break out. It fell back into this range and just chopped around the rest of the day. So we're going to see if we can get some follow through on the SPY right now. So we're just less than 5 minutes. This is the opening candle. 5 minutes into the trade day right here. So we'll have to wait and see what happens. That's my toss going off in the background for some other alerts. So what I do is pause the video, come back, we'll take a look at some scanning. And this is how I do it every morning. I'm on TC2000, so I run 3 different platforms. This one basically is going to tell me, I got percent change here, tells me how many percentile of the 11 sectors that I follow, which ones are up, which ones down. Right now we got a decent positive move, nothing over percent. That's kind of a flag for me telling me, hey, pay attention. We got a decent move in one of these sectors. So you can see that right now healthcare's up front, consumer cyclical, and then technology, and then rolling all the way down to the bottom, we got a little pullback in energy. But these will change. So what is up right now in the next 30 minutes or so, we could have a reversal, or we could have energy join the party, and then we have oil green, and then healthcare, consumer cyclical, some of these top dogs, they could end up moving quite a bit higher. So we'll just keep an eye on it. But once you choose, and TC2000, what I really like about it, healthcare is at the very top. If I click on healthcare and stuff, when I go down to my relative strength window here, what it'll do is it'll pull out the stocks that are really outperforming, and I can do that by percent change. These are my relatively strong stocks, and I'll go here and I'll look through this list to see what candidates I might have. Also, in the industry indexes, which breaks this down even farther, you can come over here and I can scan for percent change, and I'll look at percent change, and I'll look at my biggest movers. Paper products is up more than auto manufacturing, which was down yesterday. So in this market, you got to be careful, because what's up today is down tomorrow. The manufacturers got beat up yesterday. Everybody wants to short them. And then today we have Lucid up 5.3% and Tesla up 3.7%. So you need to watch what's going on with the market itself. So let's look at Lucid. We can look at this. Let me make one adjustment here and get rid of average volume there. And I want to look at it on a 5-minute candle. And you can see on a 5-minute candle how bullish this looks right here. This is a nice move. But when you look at it in context of a daily chart, this is a horrible daily chart. That's regular candlesticks. This is nothing of a move. This is the 8 EMA right here. Price is going to have to move 6.7% just to make it back to the 8. And we could see it. We saw it here. We see it here. We see it here. Back to the 8, and it fails. So I would expect this maybe to make it back up to the 8 this week and then fail again. So that'll be a possible short. I like to look at my charts on Hakanashi. Easier for me to identify the trends. And that's pretty much how I do my scans early in the morning. Then the first thing I'll do is I'll go to high a day, low a day, or high a year, low of year to start off my day. And PNW, excuse me, it's the only candidate that's coming up right now on my high a day, low a day. High a year, low a year. Now I'm in high a day, low of day, which it's too early in the morning. I can sort my list by daily range, look for those that are at the very top, and look through here as percent and look at ones that are at the high of the day. You know, but these are horrible charts here. You have to really pick through these to find ones that are attractive. I can also sort mine by looking for bullish reversals. And then I can also look for price above the major moving averages like ABT. There's one that is above the 50, 100, 200, and it's got a Heikin-Ashi reversal. Make sure we're on the Heikin-Ashi chart here so we can see it. Heikin-Ashi reversals are flat bottom candles. So there's a flat bottom candle moving through the 200 SMA. So that's a nice bullish move. Do I want to trade it? Let's look at the chart itself. It's in a well-defined downtrend. It's trying to break through the 200. If I want to draw my algo lines, you know, broke an algo down here. I'm looking for higher volume on the algo lines to give me a good idea of what might work better. Try to line up as many tops as you can. So I'll move that to that area, but it's still a breakout above that area. And I wouldn't trade this until after it proved to me that it could get above and stay above that level. I want it to be above here. So I can drop this horizontal line right there. I want it to be above that high. I can set the alert there, alert me okay, and it'll send an alert when it breaks through that price. I'm not interested in this move from here to here. I'm not interested in a move that's 2.97%, call it 3%. That's just not for me, even though it might look like a decent trade on a short-term basis. There's going to be better stocks out there. So this is how we start our morning every day. We'll go over here to bullish scans. We'll look and see if there's any poppers. There's one popper. Not interested in that. If it's not a good daily chart, not interested in getting involved in it. Let's see, what I have is 52-week highs. I'm going to sort this by volume buzz. Highest volume first. I'll look through and see. Work was up yesterday. That was a nice chart. Let's do this with Merck. I'm going to add a chart to my platform. That's how easy it is in TC2000. Make my first chart into a Heikin-Ashi and make my second chart into a candlestick. It is. Got one I like better. There we go. I'm all set now. Merck is a nice mover. Look, go back here, look at a weekly chart. Did it make any highs? It's broke out above all the highs. If you draw a horizontal line right here, look at for the breakout, you could see that it had tested it here, failed, tested. Then once it broke through, it came back and used it as support. It came back and it broke through just a little bit. We got 1, 2 closes below, and then all of a sudden it took off again. Draw yourself a trend line right here. Breaks through that trend line. Heikin-Ashi reversal candle. Nice candidate. You might want to wait until it breaks through horizontal resistance, which it did, and it's up and running. So that's basically quick technical analysis. Is it confirmed by volume? There we go. We got some volume right here. That would be through that candle right there. So we got confirmation that this is a good move up. So that's how we start finding stocks that we're interested in for the day. Everything starts with the SPY. Make sure that you look at your market internals and you go through this process over and over throughout the day. Give yourself 30 minutes to an hour at the open of the market before you make a decision on any trading basis. That would be my advice. And we'll continue on. If anything interesting happens this morning, I'll come back and record a little bit more video. Now, before I jump into the rest of my video, I just want to go over what I look at with the sector indexes. And these are the 11 sector indexes. You can see that they're listed from information technology, how they weight. In the S&P 500, the SPY, 25.6 for information technology, healthcare is 15%, financials 11, consumer discretionary 9, so on and so forth. So you see that the bottom of the heap is real estate, basic materials, utilities, some energy. So if you're looking for the stocks that are moving the market, you need to look at the stocks that are in information technology, the healthcare, the financials. Now, when all of them are rolling at the same time, it just shows that we have breadth of the market and that we are in a trend. So let's move on to my second slide. Okay, here's just a real quick slide on the sector indexes, looking for breadth of the market. I just have all 11 listed here too, but beside them, I have different examples, like for technology, Meta and Apple, healthcare, CVS, J&J, financials, Visa, JP Morgan, so on and so forth, for all the different sector indexes. Some of the more heavily weighted stocks in each one of those ETFs. On the right-hand side, I have the ETFs listed, XLK's technology, XLV, healthcare, so on and so forth. It's important to look for breadth of market, determine when you have trend days. When you have broad-based participation, up or down moves, all 11 are red or green, well, then you can look for days that are trending. When you have choppy days where they're less than 1%, there's 5 up, 6 down, or 6 up and 5 down. Those are days where you need to lighten the amount of trades that you put on, limit the amount of exposure that you have to the market. And in my next presentation, I'm going to finish up the market internals for December 28th, and we'll go into that right now. I just wanted to go back over into the ticks one more time and look at some more market internals, match them up to the Dominator. So right now we can see that the low ticks have been 1189, the high ticks has been 753, and your cumulative ticks are 3881. So you see that we have a downtrend. The advanced decline line right here, we can see the advanced decline line right after the open. We got a high of 348, it rolled over, it's been declining. That gives us another tidbit of information. Then look at your indexes, the IWM, below the white dots, VWAP, below the cloud, below the trend line, trending down, Hakanashi flat top candles. Now we got a reversal on the Laguerre to blue. You notice that with the SPY, we broken down VWAP, broke down into the cloud, broke down below the previous day low, flat top candles, Hakanashi. We have red on the Laguerre. And on the Qs, which looks similar to the IWM, the Russell, we have price below the VWAP, below the cloud, below the trend line. We have some tiny candles here looking like it's trying to reverse. We're still red on the Laguerre. UVIXI spiked above VWAP. This is volatility. It's all green. The dollar is up and TLT's down. So that's a little conflicting information for me. But overall, this gives me a bearish outlook on the market. Now let's look at the Dominator. Okay, now we're in the Dominator again. We can see that we're all red down below with our tick and volume. We can see that we broke down through a level here that we had for support. Let's go ahead and identify that. We broke down that level. We also tested the upper level and got rejected off of that area. And I like to draw these levels in for the day before so I get a good idea of where those levels are while we're trading. So you can see this is a lower support level here. We broke through it. Now we're chopping around and we got sell signals and we continue going down. Our trend line is going down. Our 50 is above our 15. We're way below the VWAP. So all these point to a negative market. So I wouldn't be taking longs at this point because you just don't have any wind at your back. There's no, you have no edge, so to speak. So throughout the day, I continuously look at this to gauge where my mindset should be, long or short. Now, this is GME. It's a short I took earlier today. I took the short at this failed candle that we had at this zone. Let me identify that for you. Didn't do a good job of that one. Okay, so when we broke down through this zone, and I was looking at this candle right here, this large candle. I seen that we couldn't get above it. We did break through once. Once we came back, it just, all the positive candles, they were taken immediately up by red candles. And then it failed this level, continued down, and then we got a little bounce. Now we're right back up to where the VWAP is. We're going to see if we can climb above the VWAP. But I would expect that we'll get above the VWAP just because institutions are just wanting to chop up all the retail traders. It's low volume. This is not a good environment to trade. But you continuously have to look at your dominator, match it up with what the market is doing at any given time to give you an idea of how you should be trading. Definitely with that pink background, we have a bearish trend, and now we're looking for the low of the day to be challenged. So we'll keep using our dominator and our market internals to try to give us an edge in this trading environment. Now in this slide, I just want to kind of show you what I have as far as the open of the market. Whenever I'm looking at the sectors that are up or down, you'll notice that it has percent change. So I look at the percent change. I want to look at how much it's moved, if it's plus 1% or minus 1%, and the ratio between up and down in these sectors. And that's how I start off my trading day. So you kind of see it in the video prior, but just want to reemphasize how important it is to look at the sectors in your opening market, 30 minutes, 45 to an hour, just to kind of get a feel for the breadth of the market and what kind of trading day that you have in front of you. I hope that helps. All right, now I'm going to jump into the Dominator system, kind of put all this together. What does the Dominator system do? So it wants to measure up volume versus down volume. So 1-to-1 is parity. Up ticks versus down ticks, same thing, 1 being parity. And the Dominator looks for a greater than 1 standard deviation move in both. So up and down volume, up and down ticks. They both must agree for a signal. So they're tracking the Dow Jones Industrial, the NYSE Index, the Russell, the NASDAQ, and the S&P 500. So basically, without watching the ticks and the cumulative ticks, you can watch the Dominator system on its own, and you can tell if you have participation by institutions, because this is going to change in the background of the Dominator system and also be reflected in the lower window of the Dominator system, where everything is divided up between the 5 indexes and tick and 5 indexes in volume. We'll take a look at that real quick, kind of bring it all together for you. Okay, this is just a 5-minute screenshot of the SPY. And I just want to kind of go over the background colors real quick. You know, you have green, which is very bullish, cyan, slightly bullish, gray, which is neutral, light pink, which is slightly bearish, and dark pink, which is very bearish. So when you look at your background colors, you'll notice that you go from transitioning between a neutral market into a slightly bullish market, and then that can transcend into a very bullish market. You know, you don't necessarily have to go from a gray neutral background to cyan to green. If you have the right market internals, if they're all pushing into green, you're going to see the background go from gray to green. So just be aware of that. You look at your plots in the lower window, you can see where you have the transition between red and green, and when it goes from 8 or 9 to 10 red to 8 or 9, 10 green and 1 bar, well, then you can see the background colors change dramatically between being neutral to being very bullish or being very bearish. So we'll cover this a little bit more. We'll look at some live video of the Dominator system, so it'll hopefully help you with your use of the Dominator. Okay, it's about an hour before the close. Just want to go back into the market internals for the Dominator system again, and kind of want to point out a few things. Remember the resistance overhead that I had drawn on the chart, and also where my support level was from the 27th. And you can see that we broke through that area right there. We went through a transition where we were gray, and this was at 9:45, 9:40. Just about 10 o'clock is when we broke that range to the downside. The Dominator went all red at that point, and price with our sell arrows, the 15 below the 50, price below the VWAP, continued down all the way down to where we made a new low. And you'll notice when we started to form the new low, when we went from dark pink to light pink, we started picking up from neutral to where we started picking up some greens on our background for our lower indicators. That's going to be the tick up and down and volume up and down. Then we went into a gray neutral background. We tested VWAP, we failed VWAP, we chopped around, and now we're chopping around into a slightly bearish market. So you can see how the Dominator has kind of forecasted for us what the price direction is, but also we're using the indicators that we have that are common to the Dominator system, that are included with the system, that help us define if we're in a trend, how strong the trend is, do we stay in, do we get out. So you can see that the 15 is still trending down. It turned green, it rolled around a little bit, went yellow, turned red. So you can see that it really kept us into this trend for quite a while. We never could reclaim VWAP the entire day. We broke VWAP, we haven't reclaimed it, so we've been on a short bias all day long. Looking for longs on a day like today is just kind of futile effort. You really need to use the Dominator to kind of help you with these trades. So I'm hoping that helps. I like to draw my support and resistance levels over the top of my Dominator chart. It just helps me see where I have potentials of breakouts to new highs or failures. And you'll notice that whenever we break that defined support level, it did it on stacking red candles. These are large candles, one after the other, with a small pause and then continuation. Any candle that is bullish is immediately taken up, and you almost have a bullish engulfing candle next, one after the other, until we form this lower low. And then we have two stacking green candles, and then a third candle after a small pause. So this just tells you it's a choppy market. It's hard to trade, but use the Dominator to you know, to your advantage to help plan these trades.